When buying a home, it's important to know what your monthly payment will be prior to going under contract on a home. There are multiple variables that go into housing payments, and I am going to show you exactly how it should be calculated. So, what are the components of a housing payment? Well, you're going to have the mortgage, which is made up of principal and interest. If you're putting less than 20% down, or you're getting an FHA mortgage, you're going to have mortgage insurance, or PMI, as you may have heard. You're going to have homeowners insurance. You're going to have property taxes. If you're buying in an association, you're going to have an HOA fee. And then, of course, you're going to have utilities for that home that will be part of your housing expenses, although they will not be part of your monthly payment to the mortgage lender. Now, what you qualify for versus what you're comfortable paying is going to be extremely important. So what you're qualified for is what the lender tells you you're qualified for. And that's going to be based on mortgage guidelines. So it's going to be based on your gross monthly income, your employment, your credit, and your assets. And lending guidelines, as I said, go off gross monthly income. So that's not the amount of income you actually take home every month. That's what your income is before deductions. So let's just say you have a 20% tax bracket. Well, the income that the lender's using to qualify you is 20% higher than what you're actually receiving on a monthly basis. And so although the lender is going to qualify you based on those things and your debt to income ratio, meaning how much your gross monthly income is compared to your monthly expenses, including the new property, well, that number they come up with that you qualify for may not be what you're comfortable with. Oftentimes I'll speak to buyers and they'll tell me I'm comfortable paying the same amount I pay for rent right now. And maybe that number is $2,000. And I'll work on qualifying them backwards based on a payment of $2,000. But in reality, based on lending guidelines, that same borrower may qualify for a $3,000 payment, right? So the qualifying payment of $3,000 is different than the $2,000 payment in that example, which is what they're comfortable paying. So you know what you're comfortable paying because you live off of your net income, meaning your income after taxes are deducted. You also know the expenses that you have outside of what shows up on your credit report, because keep in mind, a lender is only looking at the expenses or liabilities on your credit report combined with what your new housing payment will be. But you have other expenses. Your utilities, for example, that you're going to have when you own a home are true expenses to you. Although we as a lender don't look at those things or consider those things when qualifying you, it's certainly something you should do. And that's why the amount you qualify for oftentimes is not necessarily going to be the amount you are comfortable paying on a monthly basis. Now, you may want to go ahead and calculate what a potential monthly payment is prior to speaking to a lender, which isn't a bad idea. This will at least give you a general idea of the price point that you may be in when it comes time to qualify for a mortgage. And more importantly, find out where you're comfortable. You are going to go and use a mortgage calculator to do this. And I recommend going to usmortgagecalculator.org. It seems to be the easiest online mortgage calculator that's free, where you can go ahead and determine what monthly payments will be on properties. Now, there's information that you're going to need before you go on the site to get an accurate calculation, but you can of course work off estimates as well. However, if you've gone through the pre-approval process, right? You have a general idea of what you qualify for, and maybe you want to know what payments will be on a specific property before you submit an offer, and your lender is not available or they don't offer that service to you of checking what the payments will be up front, it is something you can do on your own. But the information you're going to need to do this are going to be the following, and I recommend either stopping at this part of the video, writing these things down, or you can always go back to it when the time comes. But one, you're going to want the property address for whatever property it is you're interested in. Two is you're going to want to know the amount you're borrowing on that property, right? Maybe it's a $400,000 purchase price and you're borrowing $300,000. Well, the $300 is the important part. The $400 is somewhat irrelevant when it comes to the monthly payment because you're not borrowing the $400,000. Your payment is based on the loan amount. So let's just say you're borrowing $300. So you want to know what the loan amount is going to be. You want to know what your loan term is going to be, meaning how long the mortgage is. Is it a 30-year mortgage, a 20-year mortgage, a 15-year mortgage? The shorter that term, the higher the resulting payment payment will be. You want to know the interest rate to base your payments on. If you don't know what the interest rate's going to be, or at least have an idea of what the interest rate's going to be, how are you going to figure out what the payment's going to be? If you're putting less than 20% down on the property, you're going to need to know what your mortgage insurance rate is. Now, your lender should be able to tell you what your mortgage insurance rate is at the time that they pre-approve you. If you're getting an FHA mortgage on the property and you're putting 3.5% down on that home, your mortgage insurance rate, and write this down, is going to be 0.55% of your loan amount. So to determine what your mortgage insurance will be on an FHA mortgage is you're going to multiply your loan amount by 0.55% and then divide that number by 12, which is the number of months in a year. The resulting number is your mortgage insurance on the FHA loan. If you're getting an FHA mortgage and putting 5% or more down, that becomes 0.5%. So you do the calculation the same way, but instead of using 0.55% to determine the mortgage insurance, you use 0.5. But as I said, if you're getting a conventional mortgage, the rate of your mortgage insurance could vary based on your down payment, your credit score, the type of property, number of borrowers. So it's important that you speak to your lender who you got pre-approved with, find out what your rate of mortgage insurance is so you know what factor to use in the online calculator. You also want to know what the property taxes are. So I've talked about this in other videos. Lenders are going to qualify you off of the most recent property tax bill, which in our case in Florida was 2023. 2024 bill won't be out till November of 2024. Lenders qualify you off of the most recent bill, but there's a good chance that most recent bill is lower than what the property taxes will be a year into home ownership. So for yourself, you're going to want to use a property tax estimate, and you can figure that out by going onto the county website for wherever the home is that you're looking to buy. All of those websites have a property tax estimator where you enter the property purchase price, you'll enter what type of exemptions you may be eligible for. So maybe in Florida, you're qualified for a homestead exemption. Homestead exemption will reduce your taxable value of your property by roughly $50,000, and therefore your taxes will be a little bit lower. But anyway, you want to go on the county website, use a tax estimator. It will give you a number to utilize when running your monthly payments. And then you also want to have an idea of what homeowners insurance will run on the property. Now, you can reach out to different insurance agents. Say, I'm interested in buying this property. Can you please give me a best case and a worst case of what a homeowner's insurance premium would be on this property? The reason I say best case and worst case, best case would mean the home qualifies for any sort of special pricing on the premium because maybe it has a newer roof or it has hurricane impact windows and doors if it's here in Florida, right? Worst case would be maybe it's got an original roof or it doesn't have impact window, right? Those are things that affect what the monthly premium or annual premium would be for the homeowner's insurance. And therefore, if you get a best and a worst case, you can run your numbers both ways and you get a general idea of what you should anticipate. Now, as you start your home search, you'll soon realize that not all homes in the same price range will come with the same monthly payment due to the variables I've discussed. Utilize the information in this video to help ensure you are comfortable with the payments that come along with any home you decide to submit an offer on, and make sure to subscribe for more videos that will assist in your home buying journey.